And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell with the global simulcast. Carol Massar and Tim Stenovec join us. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. As the stock market rallies, we should say the S&P up for the 11th time in the past 12 sessions. But more importantly, Carol Massar and Tim, this is really an afternoon where all eyes are going to be on Netflix, expecting to get those earnings right after the bell. Earnings growth of 15%, revenue growth of 15%, operating margins of about 32%. That is the expectation. Yeah, you mentioned the S&P 500. I think the NASDAQ 100 now on track for its 12th straight gain. And I think you were checking that out, Tim. We haven't seen that in a long, long time.
Yeah, I think going back to 2017. I'm going back to Netflix, though, because this will also be a good view on price elasticity, Katie. They raised subscription prices in March, the standard plan without ads, by $2 to $20 a month. Did people stay? Did they downgrade to less expensive plans with ads? Did we get any commentary around that? Because we're not getting subscriber figures anymore.
Well, it's interesting. I mean, at least the consensus of the guests on the close thus far has been that Netflix has the pricing power, that they raise prices and folks are generally okay paying that. And of course, that all comes back to content and what they have on their slate there. Yeah, and as to John Belton, who we were speaking with over at Gabelli, pointed out here, he really wants to see how those price increases and affect not only top line revenue, but more importantly, those operating margins. We should point out this is a stock that is sold off the day after earnings in each of the past 3 quarters. Expectation for today is an up or down implied one-day move of about 7%. Green across the screen here on this Thursday afternoon. The Dow Jones Industrial Average up about 0.2%. The S&P up about 0.25%. I believe that is another record high there. Yes, it is, of course. The NASDAQ Composite up about 0.4%. And the Russell 2000 getting in on the action up about 0.2%. All right, quick check on the big caps, folks. S&P 500, about 300 names to the upside, Katie, 202 to the downside, 1 unchanged. Here's what the Circle says when it comes to the sector breakdown. 7 sectors finishing in the green: energy, real estate, tech, some of your big gainers today. In terms of what didn't perform on this day, healthcare, industrials, consumer discretionary, and financials. But overall, pretty decent breath here. All right, guys, I'm glued to my Bloomberg. In the meantime, quick check on an IPO today. Madison Air, ticker is MAIR. That went up more than 17% in today's session. On its first day of trading, company raised $2.23 billion, the biggest U.S. listing of an industrial firm in close to 3 decades, selling 82.7 million shares. That value. I'm just going to interrupt you right now here. We're seeing Netflix shares take a leg down as the earnings cross the wire here, the headline number. And we're going to actually start with the second quarter forecast. That's the current quarter that we're in. The company guiding below analyst estimates, 78 cents a share on the EPS side. The street was looking for about 84 cents. It's also guiding lower on operating margin, 32.6%. The street estimate on average was for 34.4% there as well. For the first quarter, the quarter that just passed, the company did actually beat on those metrics. EPS at $1.23. That's about double what it was a year before. Free cash flow coming in at about $5.1 billion. The street was looking for about $2.7 billion. And on the revenue side, $12.25 billion of revenue for the current quarter. The street, Katie, was looking for $12.17. So a beat for the first quarter, but it looks like guiding below street estimates for the second quarter. And that is certainly what's weighing on shares after hours right now, down about 7%. Of course, second quarter EPS, that forecast missing estimates. Getting another headline, too, that Netflix co-founder Reed Hastings will leave the board when term ends. So a little bit of an interesting tidbit there when it comes to the board. But again, as we were just discussing with John Belton, this is a growth stock. This is an earnings growth story. And at least for right now, you can see that disappointment coming through, Tim.
Maybe some investors in the past few months wondering how the company would grow without the addition of Warner Brothers Discovery. The company saying Warner Brothers would have been a nice accelerant for our strategy, but only at the right price, repeating a refrain that it has said many times in the past. We have multiple ways to achieve our goals, including producing, licensing, and partnering, and we're constantly seeking to allocate our resources to the most attractive opportunities to maximize the value we are delivering to our members.
Yeah.
The landscape we're operating in, they say, is more dynamic than ever.
Can I just also point out, too, just another headline crossing the terminal. This is on the ad business. The company says it sees its 2026 advertising and revenue on track to reach $3 billion. And we had Geetha Raghunathan over at Bloomberg Intelligence on the program earlier today. She's actually saying that this company can actually reach about $10 billion in ad revenue by 2030. So just in about 4 years, the company's saying they're going to get to $3 billion this year, Carol and Tim.
Yeah, just to rehash, if you're just joining us again, shares of Netflix are down almost 9% here in the aftermarket. Second quarter EPS, 78 cents a share. That's a big miss. It was estimated to be 84 cents a share. And again, we've talked about Reed Hastings to leave the board when the term ends. He is, of course, one of the co-founders. Still sees advertising, as Romaine said, 2026 ad revenue on track to reach $3 billion. But again, investors not loving what they got here.
Do you guys think, I want to go back to the Reed Hastings thing that Carol just mentioned.
Yeah, thank you.
Because I'm wondering if this is one of the reasons, too, we're seeing some pressure in the after hours. This guy was, co-founder of the company. He's the one who pivoted. He brought DVDs by mail, pivoted with Quickster.
Yeah.
It didn't work, but everyone was like, it's not going to work. It worked. He invented this category.
Yeah.
Are they concerned that some of the innovation is leaving?
I don't know. He's kind of been on the sidelines for a while now.
He has a ski mountain in Utah. He's doing philanthropy.
About this company, whose name comes up all the time. It's Ted Sarandos.
He's a content guy.
Maybe Greg Peters. And obviously, having the presence of a founder on the board is important here. But I don't know. I feel like this company has already moved on and transitioned to it. And that's no disrespect to Reed Hastings and what he built. But I feel like they had already kind of moved on from that.
All I can say is shares of Netflix have jumped more than 40% since late February when the company announced it would not raise its offer for Warner Brothers. So investors certainly weighed in. So we'll see what they have to say on the call with investors and analysts to see if we get some more color about what's to come. It's all about engagement, like keeping people going back, because that's part of their ad model in a big way.